Hello everyone, this is Teddy Caxton from Forex Trading Unlocked, and we are here for a July 13th, 2021 Forex and cryptocurrency trading analysis for you. Before we get into it, I wanted to show you our disclaimer to remind you that this is for illustrative and educational purposes only. So just be mindful of that. Everything is in delay. We will have some futures markets that we will be talking about. They are always in delay by law. The Forex markets are only slightly in delay, so we are not quite in real time with those markets, but we are very close. Alright, if you haven't done so, please subscribe to our YouTube and Twitch channel, Forex Trading Unlocked, and also check out the book, High Probable Japanese Candlestick Patterns, available on Amazon.com in paperback and Kindle versions. And we will be going over some of these signals today as we cross these different markets. Alright, here we have the live action screen pulled up for you. We have the Forex-Trading-Unlocked.com website pulled up. Okay, just checking the chat room here and making sure everyone is here on YouTube and also on Twitch. Okay, got that going. And alright, okay, so we're up to speed with that. Okay, so we have from our navigation bar, we're going to pull up the workstation page. And we're going to skip past the economic numbers. We're going to go right down to our chart, get rid of this, and get rid of that. Kind of a quiet day to start the week off here for the Euro-US dollar, and Tuesday night's trade here doesn't seem to aim to please very much right now. Asian markets are opening. Things are really tight. There's not really much going on right now. European markets have a few hours before they kick into gear. Right now, I would say get ready for the pop. We have a short-term buy signal here with the Euro-US dollar looking for a little bit of a correction. I'm going to do a little Fibonacci here, and if you look at it just in the short run here, we've already hit the 50% mark, which is pretty huge. So we're buffering up key resistance right here. Now let's move this up to here, and just in case this is actually a short-term bottom forming here, where else could we gravitate to? So alright, so our upside targets here minimally are critical resistance here at 118.80. That is a key bridge to cross. We have to get above there. If we breach that level, a nice little flurry of buying momentum possibly will occur. First of all, you have to look at it like this also, besides the fact that it would be hitting that little pivot point level. We have this high right here, which is even more key. So right here, this is a critical zone here between 118.80 and 118.96. Trading above here not only breaches key resistance, but also makes a higher move high after a lower move low, which at the very least puts the daily on a neutral position. Let's take a look at the hourly. All right, hourly, look at how it's standing up here. Right now, it does look like it is poised to make a run at resistance here. I would be mindful of this level right here that was set earlier, 118.35. So let's go back to the daily basis. So the low of yesterday, which would be Monday, actually it's really today because now we're talking about Tuesday already, is a key pivot level for support. So 118.35 for your aggressive bulls, this is where you would be buying against if you're looking for a breakout to the upside. I think that if we do get above this little zone here of 118.80 to 96 and breach this to make new highs, we will not just challenge this high here, but make a run for this 120.25 area. This is where we might start to buck into a little bit more resistance and find a little bit more digestion. I would think that you're going to probably see trading like we've been seeing over the past 2 weeks, where we have a couple days of movement and then sideways, sideways, sideways for a few days at the very least. Couple days of movement, then boom, 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 another 3-4 days of sideways, boom, 2-day move. This happened to be nice last week with this nice little dip here, but overall there really wasn't much movement if you really look at the volatility and the price movement altogether. Alright, so for the bulls, we know where our pivot points are, and a failure from 118.35, which is yesterday's low, would have us looking for another run at support. Remember that this market is going in a downward slope. It is making lower move lows and lower move highs. It is coming off of a lower move low from last week's trade. Going into Friday, that set a lower move high. Monday did not pierce that. Today we are now consolidating inside it. We're only slightly higher in the day. I don't expect much of a trade going on until at least probably 2 o'clock, 1 o'clock in the morning Chicago time, which is right around just before the European markets open and right when they get to their opening. Are we expecting a big move? Not really. Doesn't mean it's not going to happen, but right now we see a lot of consolidation, and I will be mindful of these pivots. So for aggressive bulls, I would keep your stops tight right below this 118.35, looking for a breach of 118.80 and then getting a nice little rally above 18.96. Sustained trading above 118.96 definitely confirms bullish outlook for at least a short run, because remember, the hourly is bullish. If we go by this and we follow even the trend line here off of pretty much this low here and then into this one right here, the trend has been holding up. So on the hourly, we are definitely bullish. On the daily, you can see how this comes in also. It's not that steep of a slope for support, but it is kind of steep. By attrition, we will be coming through this upward sloping support line over the next couple days. Now, if we get a rally up above here, like I said, I really do believe we will see more buying momentum build as the short-term weak shorts especially start to scramble. Remember, this market's been breaking for over a month and a half. We planted this nice low. We have a nice little rally. It's in corrective mode because it is a counter trend rally going on right now. It's not going with the trend. So right now we are viewing it as a correction. Now, if we do start to get some buying momentum and we get above this last high here, which I think we'll be taking out, then that gives a chance where we probably will be in sideways trading. You have to look at the weekly here and see where we're at now. So notice these pivot points that we came up with, these numbers. Look at where we're at over the course of all this trading here on a weekly basis. It was resistance, resistance, resistance. Boom, we got above it. We shot through it. We catapulted above it, and then boom, we fell through it. Tried to hold in this range, barely dipped into it, came back in. We have acceleration between these pivot points, and right now we're hovering right on the lower one. So I would say if you look at the weekly here and we follow this little trend line here, we have this to go on. And also, what is this? We have a potential head and shoulders forming on the euro US dollar. So in the short run, we are looking for this market to get a little bit of a rally. And let me get rid of these arrows here because there's a little bit too much of a mess. Make it a little clearer for you. All right. So as you can see from the daily and the hourly, we came up with these pivots, and we're coming right along this little neckline here. And if you look at this here, this is a shoulder. This up here is a head. And over here, this is a potential shoulder. So we have some really good information going on right here. First of all, we can put this trend line from this high, which is the head or potential head, and this potential shoulder. This market is wedging. So what is going to happen? Is it going to break out to the upside? Is it going to break out to the downside? Now remember, this is on a weekly basis. So we still need to get below the lows of last week before we start to come into jeopardy of actually being a true full-blown bear. However, this is where it gets back to our daily. If we do fall back and take out these lows, we are right on that line, making newer move lows after a lower move high, sustaining the trend and also accelerating the hourly and daily into the weekly chart, which would have us falling on critical support, holding up this neckline from this shoulder to this shoulder, and then boom, we're looking for a correction to the downside. Now, is this going to occur over the next week or so? Probably not. I think we're going to have a little bit of sideways action probably going into Wednesday's trade. Look out for the oil numbers on Wednesday. Look out for the unemployment numbers in the U.S. on Thursday. Very, very key numbers that will have some bearings on not just the equity markets, but also the debt markets. The debt markets are a function of currency pricing, and if we get a radical move in the debt markets, that could probably keep the euro and the U.S. dollar currency cross in a sideways trade for at least the next week or so. So I wouldn't look for too much volatility to come into play. However, if we do start to fall, like I said, on support, that's a big deal. I think in the short run, what we're going to do is we're going to challenge this resistance area here, make a little run for 120.25, bobble around this for the next week or so, come off of it, and then continue the trend lower. Remember that we have the overall trend that's going lower on the major scale, but then we have this little correction here that at least was viewed as a correction initially, and now I think it might be the beginning of a major leg down. If you go back to the weekly and you go on a wave count, here would be your top, here's your 0, here's your 1 wave right here, this is our 2. So right here we have our 1 for our wave counts, and then we have right here, which is our shoulder, we have our 2 for a wave count, which adds up if this is a head and shoulders. So if that's the case, our 3 is coming down somewhere down here. Oops, we don't need to have that extra space there. There we go. So this right here is where we're looking in the longer term for the euro US dollar to come down to on a weekly basis if this head and shoulders is going to come to fruition. Now remember, like I said, I think on the daily basis, and since this is a weekly chart, we could travel up to this area above into this downward sloping resistance line here up to $1.1896 very easily. No reason for us not to travel up to that area there, and then once we get up to that area, start to fall down again. But if we breach it, then I think we'll see accelerated buying just for the short run. It's going to trap a lot of bulls. So I think that you have a bull trap forming. I would be very mindful of any trading up in this little area right here. This is a question mark. This is not something that you want to play around with right here. This will be a target area where if you're a bull, take profits here. That's my suggestion. I'm not telling you what to do, but I'd be very mindful of what happens in this area. You're going to have a lot of resistance here. Not saying that the euro US dollar isn't going to scream all the way up to $1.40. It could, but it's very likely that if we do come into this area, you have a high amount of resistance from pivot points, Fibonacci, downward sloping resistance lines from the trends and what have you. This is an area where it's most likely going to run into a lot of static. So expect at the very least maybe trading like you have in this area here. So once you get up in there, instead of accelerating a trend through it, you'll probably see a lot of this kind of congestion trading forming up around here, giving the market some trouble. And then of course we're looking now at towards the end of July, getting into the beginning of August, should we be up in this area at that point in time. We could skyrocket up there in a couple days. I think if you look at the ranges that we're having now, even to the downside, for the most part, I think that we don't have the ability to climb up here unless it takes probably like a week and a half to 2 weeks. And then the mere fact that if it does take a week and a half to 2 weeks to climb up there, I see a slide happening like we have right here that happened in this 3 period here, where we come up to here and then boom, slam through all the support, make new move lows on a very, very big way, and show that the euro US dollar bears are looking to play around for a little bit. And there's a lot of fundamental and technical reasons outside of just the short-term stuff to look at. British pound US dollar, this one's a little bit different than the euro, a little divergence going on here. Oil trade is off the table, but I think that when it comes to the British pound US dollar, you have to look at that as being a much stronger currency than the euro. Since Brexit, they don't have all the problems. They don't have to put out all this money to feed the European debt load is what they basically have right now, because with all the quantitative easing that they've been doing for now a decade, and it's not going to see any end in sight, at least the UK only has to deal with the UK. They don't have to fund the rest of these other countries. Now, I would be mindful as far as being a bull here. Don't expect any major surge, but remember that this market is in an overall bull trend. We have not been going down except for corrections for a very, very long time here. Now, the oil market definitely helped to drive this. Brexit had nothing to do with it, especially over the past couple months, but we could be topping here as well. We'll see what happens. I would be very mindful of this little line here. Remember how we looked at the head and shoulders with the euro? Well, this could be a shoulder here. Oops. Let's make this right. There we go. Right here we could have a shoulder. This could very easily be a head. And then we could be looking for the next shoulder to arrive somewhere around here. So somewhere in this little area here, and I think that it's very possible if you look at it back on a daily basis. Let's look for a correction level here. Let's say we go from this high down to this low. And let's say just for the short run, the dollar is in a nice little corrective bear slump, especially against the pound. Forget about the euro and other currencies. And there's reasons why the pound could gain strength against the dollar in the short run, especially with oil being on near its highs. And we'll see how things come out with them coming out of their lockdown, where their numbers are. That's one of the most critical things. But this market is poised for a breakout. By attrition, if you look at the upward sloping support line, downward sloping resistance line, and then you look at our target area here, this is a breakout zone. If we can get above this downward sloping resistance line, then the longer term trend, which we have seen that is in place right here, that puts us up into a shoulder. And then that would be the bull trap, where all of a sudden everyone's getting bullish on the British pound, US dollar, and what have you. Then reality comes back into place, and then boom, what do we have? We have a very big sell-off. So let's get to this right here. So right from here on down, this could be where we end up being come the fall. And there's a lot of technical and fundamental reasons for this. The oil market has helped to prop things up, especially over the past, I would say 6 months to 4 months for sure, but 6 months. That's kind of been capping the trade, and that's accelerated this trend, which has been going on for well over a year. Now, we haven't had any major, oops, we don't need that one. Let's go back to this arrow here. Sorry about that. All right, so let's go back to here. So except for back here in March 2020, when we had this slide, this market has been going up since then. But if you look at the overall trend, if we go back to there, oops, excuse me. Get this right here on this low. If you want to size it up to here, where that first shoulder is, see how this comes in right at the head? Now we could move this over and make it where this first neckline comes in right here. Okay, so then that supports this trend. Here's your shoulder, found some support, boom, it's failing, head, and now we're below it. And we have this downward sloping resistance line here also as well. So this is where I think you're starting to run out of gas on the overall trend, at least in the sense that I think you have a bigger correction on the horizon. I'm not necessarily thinking that the pound US dollar is going to be a bear for the next 6 to 8 months like it's been a bull for over 12. But I think that you definitely have a good chance of seeing the pound US dollar sell rallies over the next 3 months at least, going into the fourth quarter. Fourth quarter, you may see a turnaround. A lot of it has to do with oil and on what goes on around the world. If we can see a big turnaround, and here's the other thing too, is that with Biden cutting off oil in the U.S. and telling everyone else in the world to start pumping, if they do, that may actually be a negative for the pound US dollar. So that would add fuel to the fire, where not necessarily there's dollar strength, but the pound could lose a lot of luster, because part of the rally that this currency has sustained has been in part because it's commodity driven. Okay, so we've gotten to that. Now let's just double check over here, and just want to check the chat room here. We got some people on Twitch, and we got a couple people here on YouTube. Okay, just checking the viewers, and also no questions, comments, or criticisms, but we at least got some viewers. All right, well, that's good. All right, you guys are listening. If you got any questions about any markets, don't feel afraid to ask. US dollar CHF. All right, we're moving down to the Swiss. Talk about going sideways. This one here is very lackluster, coming off a lower move high and a lower move low. It's choppy at best. We'll see how US dollar strength pans out. This one we've been looking at, giving you some ideas of upward and downward price targets, but especially with this congestion, I'm starting to really get worried about whether or not we're going to see follow through when it comes to this market. So the euro and the pound, we have some very good price targets and rationale, both fundamentally, technically, and a whole bunch of other reasons on why we would look at both bullish and bearish perspectives and targets. This one's a little bit rough. It's a flight to quality currency, and this is what scares me here, is when you go to the futures market and we look at the 30-year bond, and we can look at the 10-year note as well, but I like the 30-year the best, because that truly is the one that wags the interest rate market around. Let's go to the daily. So if you look on the daily basis here, the bond market, it spiked high back on Thursday, sold off big on Friday. Was positive on the day today, but it was lower than it traded on Friday. It tried to gain some momentum, but it made a lower move low. Now it is in a bull trend, which means rates are under pressure, meaning they're going lower. Bond prices are going up, rates are going down. That's typically weak for the US dollar. However, we don't have any Fed intervention or any reason to know why we have this extreme volatility over the past week and a half, especially with the Fed speech that we've had and the Fed speak. There's speech and speak, and both of those over the past 2 weeks from last week, and then the little rumblings we heard today, and even actually a week and a half ago too, is very questionable as far as whether the Fed's going to do anything but continue to buy the market. As much as they were leaning on potentially raising rates and throwing that little shadow into the mix a month and a half ago, I think some people really railed into them and said, what the hell do you think you're doing? You're not going to curb inflation by raising interest rates right in the middle of rampant inflation over the past 4 or 5 months. So cool your jets on that. Not that you can't raise rates to fend off inflation. However, you do that when you have deflation, not inflation. That's when you start to raise rates. So, especially in this situation, there are times where with inflation you could see where raising rates would be advisable, but that's when rates are at a much higher level and the economy is in a totally different world than it is right now, or even where it was before pre-pandemic, coming off of its highs and firing on all cylinders. So those are dynamics that definitely don't come into play here, and that's where this is scary. So as far as where we're going to go with the Swiss, I do not think you're going to get a major move, at least for another few weeks. We have the downward trend, which is in play, and you can go from all the way back here from March 2020 into this high and see where that is, and then you can obviously go from the beginning of the year up into the low of a few months back, and we're wedging. So overall, the market is making lower move lows and lower move highs. Intermediate term, it's coming off a higher move low after a lower move high. This high right here is a lower move high, so it's critical. If we can breach this high from a couple weeks ago at 92.75, then I think you have a chance to see the bulls come back, and you might actually start to gain some momentum for the US dollar Swiss trade. But below it, the trend is your friend. All you're doing is continuing the lower grind, and it's just not able to really hammer the dollar versus the Swiss. They're both two flight to quality currencies, and once again, with the bond market where it's at, the Swiss and the Europeans, their rates are so low that even though our rates are going back down by the market rates, we're still higher than where they were months ago. So there's still more incentive to be stronger on the dollar than the Swiss. All right, US dollar JPY. This is an interesting bird. So as the dollar is playing around with those European currencies, this one fell off of higher new highs, made a higher move low, and we're using these as our pivots. I would key off of Monday's low here at 109.55. Everything above here keeps us poised for yet higher move highs and higher move lows. Excuse me, that was from 2 weeks ago. All right, there we go. So from this low here, that's our major support base on the daily basis from last week. Anything below there, then we're looking for an extended correction. I think we found a nice little bottom here. The upward trend remains intact on the monthly, the weekly, the intermediate term, short term, you name it. This was just at least we're viewing this as nothing but a bearish correction that has run its course. Obviously, a failure from 109.53 changes that whole outlook. However, right now we are looking for yet a resumption of the upward bullish trend, looking for us to take out these highs from a couple weeks ago. And if we get above 111.67, I don't think we're just going to hit 112. I think we got a good shot at going to 112.5 up to 113 even before we start to really fall back and just consolidate. This has been gradually making higher move highs and higher move lows. It's having trouble making any type of big sell-off. We had this one back here earlier in late spring. That lasted for a little bit, but then once again, if we go back to our weekly and we go back to our chart, we've been rallying since the beginning of 2021. This market is in a bull market. Higher move high, higher move low, higher move high, higher move low. Now, is it steep, the trend? Yeah, a little bit. Did we come out of it? Yeah, but then also we could go to right here from the last week's low, and then the trend becomes more conducive. Or we can go down to here and make it look more like a 45 and then see where we're trending here, and just by attrition we can drift over here. That would be stabilizing the trend. So if we go sideways for the next few weeks, somewhere between 112 and 108 here, and just chop around, that's very, very possible. It wouldn't be crazy to assume that it couldn't happen. Only if we would take out this 107.46, so basically below 107.5, where I find lots of support. If we fail from there, that's when I would start to say, okay, we probably have a bigger downside correction or a potential short-term bear market on our hands. But overall, monthly, weekly, daily, hourly, you name it, this thing is really poised for another run at resistance to the upside. All right, Australian dollar, US dollar. This thing is in the gutter. This thing is weak. It is in a sell rally forecast, even though it is up slightly on the day today. The range from yesterday and today so far is not that big. I would be very mindful of rallies and look for rallies to sell right now. Right now, the trend is your friend. Lower move lows, lower move highs, that is the course of action. That is what is going on. There are a lot of fundamental and technical reasons to not be a bull for the Australian dollar, at least in the short run. And I would say short run meaning 3 to 6 months. Normally I would say that short run would be upwards of 3 months. But short run now, I think for the Australian dollar versus all currency crosses, any type of bullish strength you see in the Australian dollar, look for a reason to sell afterwards. The trend is your friend, and I think the momentum will be very heavily weighted against the Australian dollar unless China changes its tune with Australia on both a political sanction-wise and also as a customer buying their products. And that seems to be the double-edged sword that they are It's kind of psychotic. They are one of the biggest suppliers to China. Australia relies on its exports to China, and now China has put tariffs on the products, the hard goods, the commodities that they buy from Australia for other political reasons, because they want Australia to do certain things, and that alone is a big political thing. And then you have the commodity aspect, where China's been hoarding and buying up commodities from around the globe, especially from Australia, and keeping them in reserves. And now the government, which is a 50-50 partner with every single business inside of China, including our American corporations also, where they are dictating that now they cannot buy their commodities on the open market. They have to buy them from the government at X price to help to fend off inflation, because they've been sitting on these things for a long time. So they are, as their partner, doing what they look as a pious thing, giving them the cost of goods at a lower price than the market price for the rest of the world. So at least in the short run, that is the plan. It will not be able to last for very long. On many schemes, it's going to be a problem. So that until that changes, and unless China says we're going to start buying all types of iron ore and all kinds of other raw commodities from Australia, and if they lift the sanctions, or not sanctions, but the tariffs rather, on Australian goods, which they purchase, then we'll see what happens. But until then, I would look at this as a bear, look for rallies to sell. We don't have any buy signals here, and all I can say is to the downside, look out below, baby. That's all I can say. Now, New Zealand dollar, US dollar, which runs in tandem a lot with the Australian dollar. This one, it made a double bottom here a couple days ago. Even if it does continue its short-term trend lower, I don't think it's just going to follow the Australian dollar. Let me see what we got here for view here. Oh, just a like. Okay. Sorry, just looking at the chat room. We got a couple different chat boxes going on here. We're streaming out to multiple channels. So New Zealand dollar, US dollar doesn't have quite the issues China does. Not that it's not impacted by a lot of things from that trade zone, but it's not as led by the leash, if you will, by China like Australia is. So it's much smaller, but it does have much more global outlets for its goods and services. It is also done well during the quarantine, whereas Australia is in heavy lockdowns again. So we'll see how this pans out for both economies. I'm betting on New Zealand getting where maybe the dollar strength may still keep the New Zealand dollar a short-term bear and maybe even intermediate-term bear over the next few months. But I don't think you're going to get a sell-off like you have going on in the US dollar, Australian dollar, US dollar. All right, US dollar Canada, this thing is a beast. We had a sell signal here a couple days ago. This is a bearish engulfing line sell signal. Read the book, High Probable Japanese Candlestick Patterns, available on Amazon.com in paperback and Kindle versions, and you can learn how to trade this signal. So, but we'll give you a little target here anyhow. So if we go off of the low from back here, and we take this high, and we follow our old Fibonacci and Gann 50% rule and floor trader rule, we have 123.04 as our target. I think that would be a good area to find support, especially since it's right around this last higher move low. If we fall below it, well, this market is in an overall bear trend, just like how the pound has been in a bullish trend versus the dollar, like we were talking about earlier. This one's been in a bear trend. This one, however, I don't see bouncing yet. I still view this as a bullish correction to the upside, what we're viewing. That's why I like this sell signal right here. Not that that's end all of all things, and I'm not telling you to get short by any means. The signal's already in place. However, I do believe that this is setting the tone for another test of support, especially when it comes to the whole oil markets, energy sector, and the fact that for whatever reason I can't figure out, our administration in this country is now at odds with the Canadian administration, which if you thought it was at odds with the last president, this is why it doesn't make any sense at all. So I can't even begin to figure out the politics And until that does start to see some sort of olive branch, which you would have thought the G7 meeting a couple weeks ago would have resulted in at least some positive speak, just to make you hang on a thread thinking that something might happen. Nope, that's not happening. And the energy sector, especially with the Biden push for OPEC and slamming the door on Canada, I think you're going to probably see the U.S. dollar Canada erode some more. With this being said, if we maintain the bullish posture, and for all of you bulls out there, just be mindful that from this low into here, if we fall down and test this support level, we're already taking out the upward trend, which is a fairly decent slope here. And if we definitely sustain a trade below 123.04, odds are that it is not just a dip in the market with a better buy before this market turns around and becomes a bull. I think this is just the last little leg here before, boom, we come back down to $1.20, fall through that, and probably hit down to $1.19, $1.18 sometime by September, October. This is as long as the political speak between the U.S. administration in Washington and the administration in Canada maintain this, well, just not going anywhere posture. So that's what we're looking at for the U.S. dollar Canada. It's hard to be a bull. Now, if we do breach this high from a few sessions ago at 125.94, on a longer term basis, that puts us more into neutral, obviously, over the past couple months. But the overall trend, if you go back to the monthly and the weekly, look at this thing. It's severe. And last month, yeah, this was a short-term buy signal. And I usually like monthly buy signals like this. But once again, the politics and all the fundamentals, technically, yes, from a technician standpoint, this is it's looking for at least a correction back above 130. But when it comes to the politics and everything else that's going on, and the commodity trade as well, there's too many hardcore market fundamentals that just drive this market into the gutter. All right, let's look at BTCUSD. I know you want to get to these cryptos, but why? They're going sideways. What do we do with this one, huh? It just keeps on wedging and going nowhere. When was the last time we saw Bitcoin trade in a range this tight? We have from here to basically here. All right, so let's go and pull this up and put it on a monthly. All right, look at that. Isn't it pretty crazy? Like, when you really look at it, it seems like it's been there forever. It blew through this little trading range, only traded in it for a little bit in a 2-month period here, blasted off to its highs that it set back in April of 2021, came back, we chopped around here, and now we're stabilizing, and we're right in the heart of it. Is that a key pivot? Is it a key area, key support? Well, yeah, obviously it is. What are we going to do with this? Well, I have to say, the only thing we can do with this is wait for a breakout. Sorry, guys, there is really nothing to say about Bitcoin right now. There's too much political stuff going on, and believe me, it is getting very political. The regulatory stuff that's coming on. Now, here's the problem with the whole regulatory stuff. I have been dealing with regulated markets my whole career. I'm a fan. I support them. I believe in them. The crypto world, I've been saying since the beginning, it's not just that it's the wild, wild west. It's totally unregulated. 90% of what goes on in that whole industry is a scam. The technology that is there is very beneficial and useful in the short run, and may even be in the long run if it adapts as technology gets stronger and better, especially computing power and what have you. And there's a lot of definite valid technical things that could help Bitcoin and the blockchain industry grow and continue to go for years to come. But right now we have all this regulatory stuff that's noosing around people's throats. You have multiple countries that are either accepting Bitcoin and accepting them in a big way, and there's countries that are not accepting it whatsoever. So this is key. So watch out for this breakout. This is very tight. We've been trading in this range now for basically, I mean, this is crazy. This has been going on now for the past couple of weeks. You don't really see this with Bitcoin, do you? At least not since a while ago, when it just went sideways for a very, very, very long time. So maybe this is the base. I don't know. Let's see if we can see some signals forming in some of these others. Ethereum, another good blockchain technology that has a future. This one right now drifted a little bit lower today. It's been going sideways. It looked like it was trying to make higher move highs and higher move lows. Yeah, well, that didn't work out so well today and now, or Monday and going into Tuesday. Sideways is the call. I think that because Bitcoin is going so sideways, Ethereum is starting to fall into that zone. So it's kind of like Bitcoin's it's like the dollar index, Bitcoin. And since it's going sideways, Ethereum is kind of like the euro or the pound, if you will. You know, it can move and it will help to maybe influence Bitcoin to the upside or the downside on any given one-day big move or a short-term daily trend for a couple days. But overall, Bitcoin is the guidance for the whole industry, the whole sector, if you will. Ethereum, blockchain technology, and how it all runs off a similar, basically parallel, and as far as their futures seem to be very much on the same track. So there is somewhat of it's kind of like the European trade zone or the Asian trade zone or the North American trade zone. Currency as a whole will trend versus other global currencies in one way because of what's going on in those trade zones and what have you, and that's kind of the impact I think that you see with the Ethereum US dollar. Overall, this technology has a lot to offer, especially with the offshoots. There's all kinds of stuff now in banking, financial payments, all kinds of also even for files for businesses and stuff like that, for moving things across the globe in light speed without any delay, and also reducing costs. Now, as long as Ethereum's at this $2,000 area, it's one thing. If this shoots up to 100,000, and then all these other coins and pieces that float through the Ethereum network and help with all these transactions, as they get more expensive and rise in value, the costs go up. So the technology, even if it's fantastic, that cost of that technology goes up. The whole point in these technologies is to reduce costs of what we're dealing with now with the technology that's in place. So, and that's something that you don't see with the technology in place, is that yes, there are costs, and do they rise? In some respects they do. In other respects they drop. For the most part, they stay pretty constant. When it comes to these things, they're great as long as they're going to stay in place. But then you have the issue of what happens when you have a financial system that adopts, say, some of these offshoots from Ethereum, and then all of a sudden they evolve into something new, and now they got to adopt a new network. These will be in use, but their value will drop significantly. So I'd be very cautious with the pricing. But for long-term investment, since we're going sideways, that's what, and we don't have any signals or any reasons to buy or get short here. I'm just telling you, as far as value, I see that this could easily get back up to its highs of 4,000. I could even see Ethereum up at like 10,000 in a couple of years, as far as if the technology holds in place and continues to grow, especially with these offshoots. Anything beyond that, I think you start to run into issues, because once it gets up into those areas, these other technical things that run off the Ethereum network that are also cryptocurrencies, those things as well will definitely grow up in price. Cost controls become an issue, and that's where I think that you're going to have the big bite. You don't have to deal with it now, because right now you're talking about pennies, nickels, and dimes against dollars and hundreds of dollars virtually, with transactions. So that's where they're enticing and they're great. But when all of a sudden they catch up to speed with this cost of the normal technologies of today that we're already using, then it doesn't matter that they're more advanced. They cost more, and they can also, you reach that point of diminishing returns. So it becomes an issue of how valuable is that network and how valuable is that asset. So just be mindful of that. I still think there's a bullish return over the longer run. Right now, we're looking at sideways markets with these two. Now let's go to XRPUSD. This is another big payment one, and this is why I get back into the whole technology aspect. Bitcoin's like the dollar index. It's consolidating. These are viable technologies. They have a use right now. They're being used, and they're growing. Asset value for cost controls and for cost effectiveness, that's why they're holding their base. I think that they, if you really look at them, all of these cryptocurrencies are way ahead of earnings, if you will. You're looking at future pricing already of years ahead of time. So not that they can't go up toward the highs that they had recently that was accelerated, but I think you're looking at a period just like when Bitcoin first went to 20,000 and then crashed down to 3,000 and bobbled around for a couple of years. This is the reality of the technology. It takes this long to get these things in place and networking them. You remember, we're coming out of a pandemic and a new whole view of how people are either working from home, working in the office, hybrid, whatever, blah, blah, blah. No one knows where they're going to be 6 months to a year from now with the office environment. Plus, got to remember that everything that's in place right now is being used off of equipment that's now it's changing radically. So now there's all kinds of new products evolving into a world that we've never been in. What's good, what isn't, becomes mainstream. You know, Zoom was great because all of a sudden everyone's stuck at home, but it's not like people weren't using GoToMeeting and a whole bunch of things for 10 years already, you know. So like that was the funny thing, is like everyone started Zooming during the pandemic. I'm like, okay, well, it's not like the people haven't been video conferencing since the 80s, for Christ's sakes, let alone the 90s, you know. So it's not a new idea, it's just a matter of what is in vogue, you know. So, and that's something you have to be mindful when it comes to these cryptocurrencies, and that's the segue going into the Doge. We love the Doge. Everyone likes the Doge. Always talking about it, looking at it just erode right now. There's so many whales, it's cringing, I'm sure. And this gets down to the technology thing that I was mumbling about. Friend, I wasn't just saying that for no reason, just to ramble. It was to keep you guys mindful of what's going on in the crypto space. Dogecoin, definitely. Oop, I got a dog. What do I do here? Sorry about that, guys. DOGEUSD, same difference, same chart. All right, so Doge USD, here we go. So we're at 20 cents now. Everyone, I remember literally just a couple of months ago in the spring, I had friends when they was trading at 45 cents, 50 cents. They're like, oh, if this thing gets back down to 30 cents, I'm buying it, because that seems to be the window. Buy it at 30 and then sell it at 50, 60 cents. That's what you got to do. Look for that kind of a return. Well, I'll tell you what, if it does get above 30 again and gets up to 60, anyone that's owned it below 60 should probably at least take off everything they've invested into it. And if you have anything left over for profits, then let that run. My main thing here is that it is definitely a meme pump and dump type of market. It's definitely accelerated by marketing, social media, and even now it's in the not just print but billboard media. I mean, for Christ's sakes, there's billboards about Dogecoin and to invest in Dogecoin. Anyone that's been trading markets as long as I have for 30 plus years knows that no regulated institutional product is marketed on a billboard. Like, you will see advertisements for Coca-Cola and Pepsi for their products, but you will not see them advertising that you should invest and buy their stock because their dividend pays something or whatever. It doesn't matter what it is. They do not ask you or solicit you in any manner, shape, or form to buy their stock. That should tell you something as far as being what a viable real market is. There's a reason why we have advertising restrictions when it comes to derivatives and financial products and things like that. You need to be an astute, not just educated investor, but you have to have money that you are able to lose where it doesn't change your life and things like that. The markets are not a get-rich-quick place, although there are plenty of people that think that it is or abuse the system and treat it like that, and that's where you have to be mindful of that. So Doge, could it get a pop? Absolutely. Look into the technology I have. My biggest problem is that there's a very small base of Even the young people, really young, like teenagers, that I think that this technology is something that they would be using in the future. Like, do they embrace it in the short run, saying, oh yes, I can see myself using this for a couple of years and even 10 years from now? But if you give them forward thinking, like, can you see yourself using this technology in 20, 30 years? Probably not. Maybe it'll evolve and change drastically. Well, it will have to survive, because we know that technology doubles every 18 months. So, and that's the other big problem with the crypto space too, is that a lot of these lesser markets are stimulated from interest because people want the next Bitcoin. They don't want to, it's not that they figure they missed out on Bitcoin, so let me get in the next thing that's I can buy for under a penny or a dime or a buck, you know, and buy 1,000 or a couple thousand of it and become a, you know, internet billionaire that way. Well, it could happen, but most of these things are pump and dump, and they are just not viable. All right, so enough of that. So we went over the DOGEUSD. We don't have any questions on chat. We got a nice little thank you on that one. Appreciate that. So let's go back to the Euro US dollar and see how that's going sideways. Let's look at how Dixie ended today. Look at that. So we had a short-term little turn of events here. We came off of higher move highs with the dollar index, and this is another one where you have to start looking at the dollar index in the regards where you could look at the dollar index through the pandemic, and the dollar was either a bull or a bear, and most of the global currencies trended that way, either with or against, what have you. When it comes to now, we're coming into more free-flowing markets. We're coming out of the pandemic. Economic numbers matter. Money matters. And with the bond market doing what it's doing and the gold market doing what it's doing, I'd be very mindful of what the dollar index does do, in the sense of when you're looking at the pound and the euro. Overall, with like New Zealand dollar, Australian dollar, remember how I said there's divergence there. With the Japanese yen, there's divergence there. So use caution when it comes to that. Like right now, there's no reason for the broad base of currencies to trend with the dollar or against the dollar. So we've gone over some good analysis here today. I want to thank all of you guys for hanging out for this little webinar, and we'll see how Tuesday's trading surfaces and comes out. And if you haven't done so, please subscribe to our YouTube channel, Forex Trading Unlocked, and check out the book, High Probable Japanese Candlestick Patterns, available on Amazon.com in paperback and Kindle versions. And also come to forex-trading-unlocked.com for all your Forex information and hanging out with the Forex community that knows what's going on. All right, you guys